The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And I don't know if you caught that last night, the Smith Foundation supposedly comedy gathering. It was a little uncomfortable to watch. I don't know if you guys caught that. Trump kind of went outside the envelope a little bit there on the digs, but hey, it's wasn't totally unexpected. So, but interesting to watch to say the least. Yeah, he had some interesting things to say, of course. Never heard booze before at that gathering. Well, let's take a look at something. I'm going to just raise the arms up high on this one. The euro has fallen. I'm not complaining about this one. I've had a long-term trade on this one with the hedge seemingly forever, at least a month. And we're at the initial targets now. God, hallelujah. Whew. 108, 86, 87. So we're right there. That's the unfair lows. Here's the lows, 108, 78. I don't know. I'm just going to keep this up for a while because it's so beautiful to see it. This is where you got to take some weight off, guys. This thing could continue to fall. The dollar is climbing, as Joey and I talked about. That's the easier trade on the books. The euro, obviously, a little bit inverse related to that, but I'm not complaining about this one. Here's the daily, but remember that weekly is going to take precedence. You got to take something off right here. It's been a long time coming. And we have pierced some recent lows, so we kind of got the stops out, and we're hitting the unfair low at the same time. So, again, you'll see that thing flashing red right there. It's in the scanner, starting to kind of poke its head down below. But, again, this is the short-term bounce opportunity. But, again, I'm not trading the bounce, just taking weight off on the long side. You guys don't seem as happy as I do about this euro falling to heck. Here's the pound. Nothing really happening much here. 120.41, 124.97 up top. I've been waiting for this thing to fall forever. Finally, thank goodness it fell. Here's the yen. A little bit of noise here, but again, I like how this thing's acting. I like another Friday close above this 103.5. Still love this trade from the long side. I was a little more partial to this from the long side than even the dollar. But again, the dollar's giving us that umph also. And the Aussie dollar, again, pulled back pretty severely yesterday after reaching those unfair highs. That's what you got to do. You got to take weight off when you get to these inflection points. You can leave a couple of contracts on easily if that's the MO of the long-term trade. But again, great indicators in itself. All right. Let's hit the other machine here. Let's go to the dollar. And again, new support on the dollar now, 98.15. We're trading 98.54. Didn't think it was going to climb this quickly. But again, that's where the new support area is going to be on the intermediate, 98.15 on the dollar. Joey and I have talked about 99 to 100 on the long term. Gold, you know what? I missed this trade yesterday. This really disturbed me because I had my orders a little bit higher. 1278.5 sitting there. We got up to 1276 approximately. I had to order at 1277.5 on the short side, and that's disturbing. Again, trying to, long-term, longer-term to intermediate-term inflection points, not always going to be to the tick, just gives you a nice neighborhood area to be aware of. Sometimes it is to the tick. But again, didn't get it quite as high for me personally. I hope you guys did catch some of that, but that's okay. The euro fell to really good new decent lows here. So here's the S&Ps. Talked yesterday. I forgot who was mentioning something in the den about what's the trade on the S&Ps, and we talked about a volatility trade might be in order more than anything else, because this thing is what it is. I mean, it's seemingly always got a bid in it, but I'm a little bit more partial towards the short side. We did get down below 21.33 finally overnight, and I'm still looking at that as a level to short against. 21.46.47 yesterday, got into that area and backed off, reached out 21.45, rounded off, so got up close to that 21.46, sold off, and still looking for this to kind of retest that 21.8, or not retest, but get down to 21.18 and possibly even lower. Bruh statistics still looking very weighted towards middle ground or the short side on the internals. Somebody in the den's talking about ES great for day trade and not so much for swing trades. Again, it is difficult to. This is one of the more difficult markets to trade on the planet, along with the U.S. Treasuries. But a lot of times it's easier, and we talked about Thinkorswim actually yesterday. They do some great option education in the lunch hour on TFNN. A lot of times with these S&Ps, it might be a better solution on the swing trade, the longer term trade, to just put a hedge in and just kind of let this thing rattle around, not suffer through the noise stop outs and things like that. If you have a gut feeling and things are lining up, sometimes Larry and Basil and the rest of the hosts on TFNN, Steve, David White, Tom, long-term premonitions can be, the noise of those kind of long-term slants that they have, and I respect their opinions highly, can be mitigated. That noise factor can be mitigated by a hedge, a simple thing. And I like to keep things really simple with options these days. Short S&Ps, long in the money calls. If you've got that premonition, that indicator, and a lot of the hosts are slanting the same way, it's not a bad play to just kind of put on a more painless situation if you're wrong and not have to suffer through the stops. All right. Crude, we're going to hit this pretty good when we come back, folks. It acted very well relative to what I was thinking yesterday and actually got back down below 51.22. Now that, that 50 area, 51.22, we're going to talk about that when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Don't mean to go back to the comedy show last night, but did you guys check out Maria Bartiromo in the background there? That was kind of weird. Wild. Anyway, Microsoft. 60.62. Looks like we're printing pre-market. We're going to go back to crude in a second, but this is one Joey and I are really talking about, and we are clean and clear now of weekly unfair highs on this. Okay, so it can't go any higher. It's off the end of my charts. Anyway, we're right up here. So, you know, the weekly 58.50, I don't like to trade instruments too many times before earnings, but this one, Microsoft, you know, I've just really been impressed with what they've done and how they've reorganized and some of the product lines that they've kind of got in gear now. I'm sure David White's talked about that a lot on his show. But you know, Joey and I were speaking, you know, past couple of times he was on the show that, you know, this is just a decent situation to be in as a long-term investor. Just blown through everything here. I'm sorry, we're trading 60.65, not 62.65. So we're way up here. New support on this stock is going to be 58.50. The market could drag this down a little bit, so that would be kind of a support area on the long term for Microsoft. And we were on the wrong month on crude before, so let me go back to the right month. Apologize for that. Let me go into December here. Sorry. My fault. Similar situation here. Just kind of did a reverse off these 51.78s on the December contract. And again, we don't use the continuous contract on crude. We're trying to move to those on the indices and the treasuries. But you know, there's backwardation. There's all kinds of things going on with crude in general, and we've got to use the front month for the profile. So they're going to change a little bit as we change months. And these are based on activity, volume at price relative to those particular points in time for those contracts. So 51.78 and bottom of the profile 49.49 on the December contract. and that's the POC on the weekly too, 49.52. So that's your bottom of your range, top of your range around 51.78, 51.98. I think we're in the middle here. You don't have a lot to lean on, but my personal opinion is crude's going to continue to relax below 50. Lost my charts here. All right. The bean trade, I really like how this worked yesterday. We didn't get a close above that 983. And now that definitely is looking very attractive on the sell side. Kind of had that key reversal thing yesterday. Went out and stopped some people and got back in the balanced area. Still think we can revisit 944.45 and even lower on the bean trade. We'll take a look at wheat. Somebody's asking about that. December wheat. Been looking at this one. Had that close last week above 415.5. I just can't get excited about, even though that's kind of some technical damage for the first time in a while. I can't get too excited about buying these grains right now. I think the dollar's going to go higher, and I think, you know, the harvests are going to be pretty enormous, and I just don't see a lot of hope for December wheat, corn, or beans hanging up in this range that they're currently in. I think they're going to all just slough off. Let's take a look at December corn while we're talking about that. Here's corn, 356, defending pretty well here. Really see this thing just kind of going back down into 330 ultimately, but the good news is you can play defense against 56, 59, that general area. A couple other stocks. Verizon. I'll get my machine to work right here. Thanks, Terry. That was the weirdness I was talking. I was kind of hypnotized. I was listening, but I was kind of looking at something else, if you know what I mean. Verizon, disappointed a little bit here. It looks like that might be a real print, 49.35 this morning. Was a 6 stock already. Market coming off a little bit, bad earnings. This is kind of where we closed yesterday. So what do you do with it now? Is it something that you buy on sale? No, you don't. I think the market in general is going to come off more. It could drag some of these stocks down that have already been weak and obviously have also had some bad news. Let's look at VeriSign, VRSN. Looks like we're printing 80.36. So back up into this 81.92, that would be kind of a wait and let the market come to you. If we can get up in that general neighborhood, in my opinion, that would be a shorting opportunity considering what I feel the broad market's up to these days. PYPL, PayPal. God, man, do they make money? 42.30 looks like pre-market where we're at right now. Excuse me. So very much above weekly unfair highs here. Supports 40.80. I don't think you need to chase this morning. You don't have anything to lean on the short side. So I think it's kind of a wait until we get a pullback to 40.80 on PayPal. Walgreens. Walgreens Boots, excuse me. Up 5%, 81.03. Looks like we're not printing yet this morning. I kind of think this is a no trade. Still kind of mishmashing around a long-term profile there. I think you got better things to pay attention to than that one. American Airlines. These are stocks that had some earnings yesterday, or some news yesterday at the bare minimum. Pretty much unchanged. AAL getting above those long-term profiles recently. What do you do with this now? Do you step in and buy it? Again, I think this is a no trade too. I think the market, again, could come down, and you got possibly some better buy points down below on some of these stocks that had shown some strength. We're going to take a look at Dunkin' Brands when we get back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
While we're waiting for the future server to reboot there, got an email from my nephew. Talked about yesterday, he was in Qatar waiting to get to, he's going to go hike up in Nepal. And this is Kathmandu, if you guys are interested. He's got a nice beard going there. That's Kathmandu down in the valley there. And there's a monkey, of course, and there's some sights from Kathmandu. Just got this, literally. So gonna not hike Everest, but kind of peter around the 21,000 level. Larry, you climbed Mount Everest 3 times? Wow, I didn't know that. I mean, are you serious? Oh, okay, yeah. Larry's pulling my leg. Okay, so Duncan Brands, but proud of the guy. Georgia Tech graduate, getting some things that knocked out of the way while he's young, because Larry and I would basically die if we tried that. He's a young whippersnapper. Dunkin' Donuts. Here we go. Okay, so not exactly the best news out, and not printing this morning, but probably going to open around 49 and a half. So let's see. This is support on. I mean, it's been a strong stock and actually didn't act too badly based on some missing on revenue. So you got support at 48.64 on Dunkin'. Should you play around with that? Again, I'm not real high on buying stocks right now, but if you're going to buy some, buy the strong. This one's giving you a chance at this support area to try to have a little bit of a trade and bounce there. Let's take a look at Schlumberger, Slob, as we used to call it. I used to hate this specialist. Anyway, we'll talk about that some other time. 83.05 looks like we're printing this morning. So, I mean, what do you do with this now? Let's take a look at, crude. Not exactly excited about buying that. It definitely is something that had crossed the borders and used 80-90 as support recently. But what do you do with it now? That's the big question. I think you just stay away from this sector. I'm not exactly excited about oil continuing to go higher. It seems like they're putting a solar farm in every corner of the planet right now. Let's take a look at Big Mo, Altria. Trading up this morning, 64. So this is the deal on Big Mo. You got earnings. You're kind of getting back up into this unfair low neighborhood on the weekly. That big number is 65.38. That's where it's been a weak stock lately. But again, if we can climb a little bit higher, I think this would be a really good thing to put on your radar screen on the short side around 65.38. Really like this action this morning. Just let it float a little bit higher. 65.38, just keep it on your radar screen. You probably set an alert on that one in platforms. Let's take a look at China really quick. We're going to look at the Shanghai, again, kind of it's gone into this coma state where it's really gotten the volatility's contracted, but we're back up into some weekly unfair highs around 30.98. Let's just call it 3,100. And I was just reading something this morning relative to what Joey had kind of brought up, and I was just shocked about the real estate market, how big the numbers had gotten. It says China house price index dropped to 4.3% in September from 9.2% in August, amid attempts by the central and local governments to dampen the red-hot sector with purchasing restrictions in a number of cities as fears mount about the huge debt in China. Despite the early signs of cooling, analysts are skeptical about the government actions. The most powerful property control is credit tightening, which we haven't seen. Purchase restrictions currently imposed can still be bypassed. And we talked about the yuan yesterday. We're going to go look at that again. Well, if we can find it, here we go. So the Chinese yuan has just completely come unglued here. And Joey had talked about 6.9 start looking at it from the short side, some government intervention up in that stage, it's definitely racing towards that area. This is our daily, and this is after Joey talked about it yesterday morning. And he's talked about it before, but again, I don't think you want to play around with this on the short side. It's kind of crazy to buy it up here. There's no way to play defense. Here's your 60-minute. But again, I think you're just playing with fire against the long-term odds on being long and hoping that we get up in that 6.97 even. And then when we get up there, it would also be nice, not that that's the stake in the ground to back the truck up. Just let's wait for some profile action to appear, and then it might be time to step in. If you missed the first part of the show, we talked about the euro. I did the double hand raise on this one. Thank goodness it's gotten to where the first targets are on this one. A weekly close, I think, you know, you've had a big move here from that POC on the weekly getting below 111.43. So we've had what? 250 pips pretty quickly. Got to be willing to take some off here. It's just kind of resting on those weekly unfair lows. Yeah. Let's take a look at what a cool symbol. It's not coming up for me here. Oh, here we go. Guggenheim China Real Estate ETF. And unfair high is 22.47. We broke it last week. That's going to be your kind of close in the profile, and I don't even know if we're going to retrace back up into that area. Lows 21.63, probably going to see that and possibly lower. Looks like we're printing, don't have any prints this morning, but 20.46 is a big number, 21.63 down below. I don't trade this, but again, the impending news, possibly not very friendly there. Let's take a look at AXP. All right, so had some movement here without question. Looks like we're printing 66.55. We're going to take a look at this when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. I think we're honored. Joey, are you there?
Hey, how you doing, John?
Hey man, what's on your mind, buddy?
I don't know. I mean, the dollar is really just blown the doors out. So it looks like we're on our way to the 100 level. We'll probably actually just touch that level before coming back. In the next few weeks or so. But it's a great sign. So everything we've talked about is coming to fruition, which is great.
Yes, it was a couple of good calls there. And I was telling everybody, actually I mentioned it twice already, the euro finally getting to those weekly unfair lows. I did a double hand raise on that one. God, that's been a long time coming, huh? Whew.
Yeah, absolutely. So
hey, listen.
Taking a little bit of profits today, just kind of taking a little bit off,
you have to. You have to.
And then we'll put it back on any bounce again.
I was showing some photos. My nephew's in Nepal right now. He's in Kathmandu. I was showing some photos earlier.
I was just there.
Yeah, you just went to Nepal. What? I didn't even ask you why you were there. What was? You didn't climb Everest. I'm pretty sure
I
of that.
didn't climb Everest, but it was the next best thing, which was I spoke at the very first major entrepreneurship conference that they've ever had in Nepal. So it's great to see that they have one of the biggest WordPress programming communities in the world. I had not known that before. So it's actually the tech scene is really going well there, and it's good to see that that country is one of the poorest countries in Asia. It is they got devastated by the earthquake last year as well.
Right.
So there's a lot of devastation there, and it's just great to see that technology is helping that market and helping those people.
Yeah. How was the? I mean, I've never been. I mean, when I go to Colorado, I start huffing and puffing. How was the? Was it a little hard to get your breath there? I've never been up that high.
Well, Kathmandu is not high. Unfortunately, I didn't get to climb Everest or anything.
Yeah, but I mean, it's up there.
I did take a flight. Yeah, I did take a flight up to see the Mount Everest, and I actually got into the cockpit and just saw the mountains up close, which was amazing, absolutely amazing sight.
Wow.
I'll send you some photos, but it is absolutely amazing there.
Awesome.
But it's great to see that technology is able to kind of help the people out of this disastrous situation that they've been in, rather than relying on what countries used to have to rely on donations, the World Bank, all that stuff, in order to get them out of trouble, and here we are. People are helping themselves through some really tough times by just using technology, which is great.
Yeah, Terry Wong, our buddy over at Dragon Law, in the cyber report there in Hong Kong, he said that he had 4 programmers that work for Dragon Law just moved to Nepal just because they wanted to be there and work out of there. It's wild that you're saying this because it's a great place to be, and there's obviously a decent programming community there now. Where do you think these treasuries are going to go? You got time to chat about this one, or are they just kind of stuck for a while? Because
Yeah, I think, to be honest, I don't think. I think we're just gonna, we've moved a little bit on the treasuries, but I don't think we really go that far. So I wouldn't necessarily be counting on a further breakdown and crash or anything like that. I think obviously the bond market, the global bond market as a whole, is probably one of the biggest bubbles in the world, but there's just too much fiscal support by all the central banks to be able to actually crack that bubble. So that bubble is going to go on for a while, I think.
So did you catch the comedy kind of event last night with Trump and Hillary?
No, I
watch it on YouTube.
No, I'm not going to do that either. That is the last thing I want to waste my time on.
I tell you what, another instrument we were talking about, Microsoft. This thing just blew a gasket yesterday. Just completely way elevated above the weekly unfair highs here. I don't know if you're keeping your eye on that one, but
we talked about Microsoft a few times on the show.
Yeah.
Just saying how the new CEO is light years ahead of the old one, which is busy watching the NBA. Luckily,
exactly.
Luckily for all shareholders of Microsoft, he's busy doing something else now.
Yeah.
But the products coming out of Microsoft and the new business model of having more and more subscriptions is just a terrific thing for them. And it's about time that they did that after so many years. So good on them, and it looks like everything's working.
Yeah, we deal with a dev house out of Sioux Falls, South Dakota, called DataSync. They do a lot of big enterprise level projects, and they have actually converted over everything they're doing from just Microsoft Dynamics. If you guys want to read about that, just get on the net. Joey, that has been something they have just dived into. Microsoft, there's so much integration going on with Microsoft enterprise level Dynamics and other Microsoft products now. They have an endless supply of work. So they've actually started sending some to us. But one of the things that basically Microsoft does now is that literally they call them up and basically, you guys still like money? Integrate this. I mean, directly from Microsoft. There's so much work going on the B2B side with Microsoft products now. They've converted their whole business over to basically integrations with Microsoft.
That's fantastic to hear, because a lot of the enterprise software hadn't been updated for so long, and so this is actually a great time to integrate everything.
Well, I read some more articles on what you were talking about the Chinese real estate market. I guess they're going to try to get a little innovative in calming that down. And basically, they were saying the only way to truly calm it down is to kind of meddle around with rates. The yuan has skyrocketed since we talked about it yesterday, actually. So, any new thoughts on that? Or are you still looking for 6.9? Good.
Remember, we talked about the cup and handle, which is one of the I know it sounds weird, but anybody who follows this is one of the most powerful setups in all of technical analysis, and this is a perfect cup and handle breakout.
Awesome.
I have not seen a better one myself.
Can you hang on for the last 5 minutes?
Yes, sure.
Great. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We've got Joseph Chong on with us from Hong Kong today. Joey, we were finishing up about Microsoft, but a lot of what do you personally trade? I mean, place bets on pre-earnings announcements and pre-news. Like, what is your stance on things like that?
No, personally, there's two types of trading. One is a very long-term fundamental type of trading where you have certain stocks like Amazon, Facebook, that you just know that they're good companies. You're using the products. They're making money. You just don't trade in and out of those very often. In fact, I probably use like weekly bars, weekly profiles to look at those to see whether I should get out, in times of bear markets or major corrections. But other than that, I don't even look at them, right? And so if it's earnings season, I don't care. I just ride it through. But every other type of position, I will square the position a day or two before the actual earnings. And
Okay.
that is just because there's just too much uncertainty. In the U.S., there's other markets that don't react as violently. So, if Facebook or some of these big companies, when they miss by a penny or two and have a wrong guidance, all of a sudden it's 20% on a $100 billion company. It's ridiculous.
Yeah.
It is absolutely just insanity, and we have to deal with that as fund managers and investors. It's just insanity. I can't deal with that, so I just get out, and then the next day I get back in, depending on what the signals are, and and if I miss out, I miss out. But those are for kind of some of the for all of the non-core positions. The core positions, I have to kind of sometimes just deal with it, and unfortunately, everybody in the market has to deal with it. I don't like it. I really hate it, and even optionality is really hard to play around those positions because the optionality is always skewed one way or another, and so the volatility drops off the cliff after the earnings, and then you don't make any money anyways. So,
Right.
It's really hard to play optionality protection on that as well. So a lot of times I just forget it. I'm just gonna hang with it, and those are long-term positions anyways, and deal with the volatility.
Yeah. So what you're saying is that the summary of it is on the long-term positions, it's kind of pointless to try to hedge them before
I've
the
tried
earnings.
one way
Yeah.
or another.
Yeah.
I've tried all kinds of different types of hedging mechanisms. It just doesn't work.
Right.
When it goes wrong, it really goes wrong, and even your options are down. Even when they're going, when you have them the right way, they're still down because the volatility drops off a cliff. So it's ridiculous. The only, I guess, potential way to play it safe is just to sell in the money volatility, sell call, and just kind of at least get a little bit back if it really moves.
Right. Well,
Right.
listen, man, it's been great having you on again.
Yeah.
We're going to end the show now, and
Okay.
have a good weekend, and guys, have a good trading day, and we'll be back Monday.
Okay. Take care.
Thanks, Joey. Okay.
Bye, John. Have a great weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.